Good morning. Today is Monday, May 23rd, and we begin our week 8 of Business Finance 330 online, our final week and our course concluding week of this spring 2022. My name is Professor Hasse, and this video this morning will introduce our final examination work, which is due May 29th, Sunday, and we'll go over long-term planning, Chapter 18, and short-term planning, Chapter 19, key topics of those two chapters. So I want to just again thank everybody for all your hard work this past 8 weeks. This is not an easy course to do and to accomplish in 8 weeks, and I commend all of you and just ask you for one more good week of work as we conclude our studies. So let's take a look at the final examination that has been posted to Blackboard. I'm speaking live and in color this morning from my office on the University of La Verne campus, College and Business Public Management Suite, room 122. Don't do this very often, but in other words, put together videos from my office on campus. But I am on campus this morning, about ready to, in about an hour, giving my final examination in Accounting 2. Remember those days? Okay, so first of all, here's our Blackboard site. And if you go to Assignments and Examinations, you will see our final examination with both, as you're becoming familiar with, both a PDF and a Word doc format. Download these and post them back to this file folder by next Sunday, May 29th. There is no extensions available for this final examination. I know we've had extensions on our other work during the course of the spring, but there can be no extensions because I have to get the grades posted beginning that Monday, the 30th, and review everything and get it all ready so I can post your final grades to the registrar and to you all on Blackboard by Thursday, June 2nd. So no extensions for the final, so please act accordingly. The site for the posting of the final will shut down at midnight next Sunday, May 29th. And also remember, you have to do an update of your portfolio. One last spreadsheet of your portfolio valuation as of Friday, May 27th. Determine your ending value and your gain or loss of your portfolio. Also the ending values of the Dow, the S&P 500, and the NASDAQ indexes and their gain and loss in percentages over the time period, and see how we did. Again, the final leader of this portfolio of our spring will be awarded the Wolf of Wall Street, the student who performs the best with the greatest capital gain. So good luck. And also, so remember that you're going to submit at least 2 files, your examination file with your work on it and the portfolio spreadsheet file. If you do need a spreadsheet to do some of your work on the final, please go ahead and do that and post that as well. Any questions, please advise me during the course of the week up until Sunday at midnight. Again, no email postings of this work, everything posted to Blackboard. Here's the final examination of our course, the last few chapters that we've studied of our course. And it is, again, a format that's fairly familiar to you. We have some short answer questions, basically 8 of them, short answers. Make sure you either type your work, download the file, the Word doc file, and type your work there, or put your work on a separate file, either way. But just make sure when you do post your file, it has your name on it so I know whose file it is. Again, short answer, asking questions about our last few weeks of work. Excuse me, that's question 1 through 9. And then part 2 is a true and false about capital analysis that we've spent a lot of time on the last few weeks. And then part 3 is a student portfolio update, where you are to determine your ending portfolio value of May 27th, like I just said. Also, and I'll show you a sample of that in just a minute, tell me what dividends has been paid by your portfolio's firms since during our course. List the amount of the dividends paid by your company. You can find that information in the historical file in Yahoo, where you go back, look for old closing number dates in historical area. You can also find the dividends paid by your company during this period of time. Then you're going to compute the amount of dollars and percent of gains or losses, and then compare that to the 3 indexes that we've been tracking. Did you beat the markets to determine our Wolf of Wall Street winner? So that's the 3 parts. Short answer, 9 short answer questions, some true and false questions about capital analysis, and then your student portfolio. Don't forget, if any of you have yet to do so, I'd appreciate it if you do it this week, is complete your course evaluation. All you have to do is click on this link. This link is also located in various areas of your Blackboard. Click on the link and you can begin to answer the questions of our evaluation. Should take you 5 minutes at most, and I would appreciate you doing that. Thank you. So that's our final. Let's take a look at what our portfolio should look like at the end of this course. So here's a sample portfolio. It should basically show 2 key components. The original portfolio that you selected back on April 8th with its original allocation of $100,000. And then your updated portfolio as of May 27th, this Friday at the close of the market, this Friday, your updated prices of your stocks, your new valuation, your total portfolio value, and notice the percentage loss or gain of your portfolio. You've already you might already have a section on your portfolio for beta, but now I also would like another column called dividend, where you list the dividends paid by your companies. If they didn't pay a dividend during the April 8th to May 27th period, just put 0. But what dividends were paid per share on your portfolio over the course of the course. Then the final values of the 3 indexes and their changes over the time period of April 8th to May 27th. So I'm interested in your ending value, gain of percentage, plus or minus, your dividends for the period, the 3 indexes, and their changes in percentages over the period of April 8th to May 27th. So that's what I'm looking for as part 3 on your examination. Again, this should be in a spreadsheet format, posted along with your other work. Spreadsheet, if you want to get credit for that part, which is basically 30% of the examination, you want 30 points, put this in a spreadsheet. Excuse me. And I'll be around this week if any of you have questions about this. Another key aspect of financial management and finance responsibilities of financial manager in a corporation is financial planning. Planning into the future, taking the historical data, taking the capital budget analysis, taking all the information that is given to you about your stock prices, your debt position, everything, and planning what that looks like going forward. Remember, it's required by every public corporation in America every quarter to provide a financial model, a financial plan for the next 12 months. Every 3 months, they have to do this. It's required by law. It's managed by the Securities and Exchange Commission. This helps investors. This helps people who do business with these companies understand what the company plans on doing. So financial planning is a necessary, huge part of financial management. And financial planning process is talked about in Chapter 18. It analyzes the investment and financial choices open to the firm. Where are they headed? Where do they want to invest? What new markets do they want to get to? Do they want to contract the business, get smaller? Projecting the future consequences of these decisions. Again, making these decisions and then analyzing what this is going to produce down the road. Deciding which alternatives to undertake. Based on what we see our business at now, where are we going to be next year? Where are we going to be in 2 years? Usually the financial planning process is relevant if it goes out up to about 5 years. Anything longer than 5 years is pretty well a crapshoot. And that's a tough call. But Any period from 1 to 5 years is part of the financial planning process. It sets goals and it measures the performance of the managers of the company, how they're doing. If they say they're going to do this, do they do it? Investors and investors of a company and customers and vendors will hold these managers accountable to these projections and goals that they set. Very important to the financial planning process. One of the key things in financial planning is what's your time frame? What's your timeline? Are you planning for the next year? Are you going out 2, 3 years, 4, 5 years? What's the time frame? Because that has a lot to do with it. Okay. And there's usually about 3 scenarios to the financial planning. Your optimistic case, if you really think things are going to go well. Your expected case, the most likely scenario of what you think is going to happen. And then the Darth Vader, the pessimistic. What could go wrong? I'm sure in the last 3 years, if you go back 3 years, not too many companies provided a plan or a financial model for the pandemic, but I'm sure they all had a financial model for a downturn in their business and their industry, of which they can apply to the pandemic once it hit. So 3 scenarios could be part of the time horizon. Best case, optimistic. Most likely, expected. Worst case, pessimistic. Because these financial plans help managers ensure that their financial strategies are consistent with their investments in capital. They highlight the financial decisions necessary to support the firm's production and investment goals. This is what upper management does. It sets the strategies of which is going to be implemented by the middle managers of the company. Why build financial plans? Well, it's part of a contingency. What if scenarios? Are we going to do well? Are we going to do bad? What if scenario? We need to have options available to us in our business. If you know this, if you get up in the morning and you say, okay, today's going to be a great day. I'm going to the Dodger game. I'm going out to dinner. I don't have any work to do. It's going to be a great day. Well, let's say halfway through the day, you're going to the Dodger game and you get a flat tire, or somebody gets sick, or your day changes. Are you able to deal with that? Do you have a contingency plan in your mind or in your well-being about how to manage changes in your life? Companies have to do this dramatically. Also, it gives the company consistency from one quarter, from 1 year to the next. They go through the same procedures of planning. They go through the same models to plan their business. And there's a variety of different types of financial planning models. Again, in this class, I'm not going to ask you specifically about these models, but again, there's different ways of going about this. Inputs are the financial statements, key variables in your company's trending and trend analysis, what's going on in your markets or your industry, what's going on in the world around you. Planning models, what are the key equation of key relationships in your business? Is your business generated or run by sales growth? Is it run by competition? What your competition does drives your planning, or does it evolve around inflation or costs? And these outputs are in the form of financial statements, sources and uses of funds. One of the questions on the final examination is to designate what are sources and uses of cash to be used in planning models. And here are the main models of planning. What is called pro formas. Pro formas are just taking your balance sheet, your income statement, and your statement of cash flow and projecting out what you think those are going to look like in the future. Another important model used in finance is called the percentage of sales model, which takes your future based on sales growth expectations in your business. And finally, it's called a balancing item. In other words, variable that adjusts to maintain the consistency of your financial planning. In other words, we expect inflation to be 5% this year, and that's going to be the driver to our planning. So some is pro forma, just taking your financials and expanding them out into the future. A model based on sales growth, a model based on cost or inflation growth. all different types of models to base your future business projections. And they all drive around what's the sources of your net income, where you're getting your assets, where you're getting your capital growth. Is there going to be new debt in the future, new external financing? Remember, internal financing is the profits that you designate. External financing is going outside the company for new capital, for new debt. What are there going to be our needs into the future? Are we going to have enough profits to fund our business into the future, or do we have to go out and issue new stock? Do we have to go out and borrow more money? These are all the endpoints of financial modeling. So basically, it all evolves around taking your financials and going forward, taking your financials and projecting out based on your industry, basing on your markets, basing on your trends of your company over the years, how you project out into the future. But the key thing to financial planning is to give your investors, give your management team, give your employees, give your vendors, anybody who you do business with. It gives them an idea of where you see the company going, and is the company in good management hands to deal with the future. Long-term financial planning is very important. Naturally, it sets the goals and strategies and the performance review of a company going out into the future. 1 year, 2 years, 3 years, and so on. But even more important, especially to smaller businesses or smaller corporations, is the management of your short-term planning. Do you have enough cash to pay bills, to make payroll? Do you have enough of profit, providing enough return for your investors? This is called working capital. What is the short-term financial needs of your business? Long-term, yes, huge, to go out and get long-term capital to show the world where you're going to get to. But you need a short-term financial plan to make sure you have liquidity. Can you pay your bills? As I was reading the other day, 4 out of 5 small businesses, small corporations fail after 18 months because they are not working capital managed well. They don't have enough short-term resources. You can see the big picture of where your company's going, but if you don't have the cash flow and the necessary means short-term to run your business, you're going to fail. So that's a key part of financial management, is just short-term aspects. What is working capital? All right, well, working capital is the differences between short-term assets, current assets, and short-term liabilities. Do you have enough cash, marketable securities, accounts receivable, inventory management to manage day to day? And what are your current bills? What's your accounts payable? What current liabilities do you have? What is your payroll like? Are you paid payroll twice a month, once a month? Is the cash and the short-term assets giving you enough liquidity to make these short-term needs? So working capital is also part of statement of cash flows. What is your cash flow from operations? Net income, depreciation, and changes in working capital. That's your operating cash flow. Then you also have cash flow from investments and financing, but the short-term needs of the company are your cash flow from operations. What is that in your business? One of the questions, as I mentioned earlier on your final, is what are the sources and uses of key accounts in your cash flow? What are they? Designate what those are. Are they going up or are they going down? Another key thing is, naturally, in working capital management, is cash budgeting. And I'm sure a lot of you know this from your own personal finances. Many of us, most of us, live from paycheck to paycheck. Yes, we do put some savings in, and you should have substantial savings. General rule is having 3 or 6 months worth of paychecks in a savings account as your safeguard. But a lot of us can't do that. We go from paycheck to paycheck. What are our sources of cash? Our paycheck. What are our uses of cash? Rent, liabilities, debt, credit cards, clothing, food. Hopefully we have a surplus between those. Well, it's the same thing for corporations. Their short-term management of their business, are they providing enough cash? In other words, sales, revenue, plus the collection of receivables, the collection of invoices. Is that meeting the needs of the uses of cash, payroll, rent, purchase of materials, cost of goods? Are we managing our cash flows correctly? And that's very important. So let's take an example. Here's a company called Dynamic Mattress Company. Okay, and here's their forecasted sales sources of cash for the next 4 quarters. Okay. So their AR ending balance is accounts receivable with their beginning balance plus sales minus collections. And this is what they anticipate generating in cash flow into the future by taking into account their sales, their collections, their receivable balances, and they're able to determine their cash flow going out into the future. At the same time, what are their bills? What bills do they have to pay? Payroll, accounts payable, taxes, buying inventory, whatever. What are their expenses? So here's sources of cash, collections of receivables, as this company's mainly an invoice generated company. So there's their cash flow sources. Here's their cash flow needs. And notice in the first quarter this year and the second quarter, they have negative or negative situation of cash flow. It comes positive in the third and fourth quarters, but in the first and second quarter, they're projecting that their cash going out is more than their cash coming in. Thus, they have to find additional sources during that period to make sure they can pay those bills because of that shortfall in cash. Many companies use what is called credit lines. They borrow short term on a credit line from a bank. They get a line of credit. Let's say a lot of companies get lines of credit, major corporations, for about $100 million. They can draw on that line of credit and pay if they have a cash shortfall. And then once the cash starts coming in, they pay off that line of credit. But this gives the company an idea. Oh, geez, looks like in the first quarter of this year, we're going to have some problems. We're going to have to go out and find additional sources of cash. Probably borrowing money short term and then paying it back in the third and fourth quarters when they're generating more cash. But this is huge to short-term financial planning. What is our sources and uses of cash? So as you can see, during the course of the period, if they start out in the year with $30.4 million of cash, they have a cash deficit. So that means at the end of the period, they're down $110 million. Now they have to generate some financing because they need a minimum operating balance of 25 million. That's a kind of like you kind of like to maybe keep in your personal finances always about $100 in your checking account just to be on the safe side. Well, this company requires 25 million. So that means it gives them an idea of what type of financing they need going forward into the year, quite a bit. Only in the fourth quarter they don't need that minimum amount of financing, so they can start paying off some of that short-term debt. This is huge for corporations. If you do not work on this and plan for this, you're not going to be long to this world of a company. Short-term financial planning, working capital management, sources of cash, uses of cash, and when during the course of a short term, like a year, will you need additional funding to meet those obligations. So again, trying to determine our expenditures in relationship to our sources, we can determine our cash needs and our working capital. So again, going back to what we just used, here's a short-term financial plan for that Dynamics. Remember, we just calculated that they're going to need this amount of cash going forward. Here they go out and get some bank loaning. They maybe work out agreements with their vendors to extend some payments beyond 30 days. That companies do that a lot. And maybe they sell some marketable securities. They liquefy some money that they have in money market funds or some cash that they have. And so they go out and they can meet the cash needs of their business. And then they can repay that bank loan later on in the third and fourth quarters when they're generating enough cash to pay off that loan. And this is exactly what companies do every day. One of my first jobs when I got out of college way back when is I was a financial analyst for JP Morgan. in New York City, and I looked at companies' short-term financial plans that they gave the bank. So we would fund some of the times during the year that they needed money. For example, if Dynamics was our one of our customers, our clients, that we would know that in the first quarter they would probably need a bank loan of $100 million. And then we would be prepared for that and know that also they're planning on paying us back that money later on in the year. This is one of the key aspects of financial analysis, but more importantly, financial management for a company is understand your short-term needs. So 2 key points of this week, week 8. How are we projecting and letting people know our long-term financial plan over 1 year in length, probably maximum out to 5 years, compared to how we managing short-term in the next year, in the next few quarters? How are we managing our cash needs? Are we going to be able to pay for all the resources we need to manage our business, expenses, payroll, paying of payables, management of the company? Short-term and long-term financial planning are key to financial management. So as our last week, number 8, class lecture concludes for this week, a couple key points to raise. Many of you are still completing assignment 4, so make sure assignment 4 is posted as soon as possible, no later than Wednesday of this week. I'm going to get the grades together on Wednesday and post them so you see where you stand heading into your final few days of the course and your final examination. So all grades will be posted and the solutions to assignment 4 by Wednesday. And if you're posting your work on Wednesday, you'll get it on Thursday. But look for that in midweek. We will have a ending course video on Friday to highlight assignment number 4, to talk about that, and to just do any last minute administrative duties for our course. Look for that video on Friday of this week. And then you have your final examination, your final coursework for our class, which is due next Sunday with no extensions. Work on and complete your course evaluation, and I'll post your grades a week from Thursday, June 2nd, and you'll see how you did in our class and look forward to it. Also, in my concluding video on Friday, I'll also talk about going into the future. After you're done working with Professor Hasse in Business 330, what can you and I do together going forward as a mentor, as part of your network, and how we can help you even going further into your career, working with me and my services that I can offer you to help your network. Okay, everybody, have a great week. Good luck. I'll be available. Remember, Wednesday evening, we have our student hours if any of you have any last minute questions. And if not, I'll see you in our video on Friday. Have a great week, everybody. Adios.